be doing free webinars every day at around this time of the day, around 13 GMT. That is when we usually do our webinars. This is a part of promotion for March. So I am going to start the coverage today with the euro dollar. Basically because it's the most interesting setup. Now, those of you that have been following me for a while know what is my general feeling about trend lines. However, this is an undeniable trend line that we are currently holding on the euro dollar. Perfect touch. Okay, let me just remove these tips since it's a bit too much. So we had a perfect touch over here at the top of this trend line, that we had for a while. This is last Monday's, violent setup to the downside, and we are rejecting from there. Now, the thing that actually makes me like this setup is the fact that if you draw this Elliott wave channel, you can see that this is a C wave, over here, almost certainly, with an A equals C. A equals C. Now, I'm saying almost certainly, because there is certainly the possibility that we are trading a long setup and we have made lows for March. However, that probability remains extremely slim for now. We need more confirmation to actually consider a low in place for March. Now I'm going to go into that in a bit. Now first I want to cover some other stuff that I consider important on the short side, and then I'm going to cover the potential long side. Now on the short side, and this is pretty much why Alexander and I disagree slightly on what is what. Okay, let me just remove this because it's too much. Let me remove this. What constitutes our disagreement is that the halfway back short that we traded last week, first this pretty large front run of I don't know how many pips was it. It was pretty large front run, guys. As you can see, front run by 7 pips, pretty big front run of a halfway back. It never reached target, as you guys can see. Now, what I'm considering actually is that I consider this almost certainly a target fill, simply because we had a huge downside. So the difference between what me and Alexander consider is that I consider this to actually have traded targets, whereas he doesn't consider this to have traded target. If you consider the targets to not have traded over here, that means that we have a chance to retrade this level. However, so pretty much Alexander is saying that we could potentially be retesting the 1.316s. However, I consider the short targets to have been reached for one or another reason. Basically, my reasoning is that the down move was quite sharp, and might be a bit unrealistic to expect targets to be perfectly hit each time, even if it was like a 15 to 20 pips difference. So I am considering us to be in what should be the next in the series halfway back short. It is also, like you have to keep in mind, and this is I think a very important. If we trail the whole series of shorts, let's start. We have one halfway back short. We have the next in the series halfway back short trade. I guess you can make a case for a small dip, but let's just call it valid. Third halfway back short trade. Fourth halfway back short trade. Fifth halfway back short trade. And currently we have a sixth halfway back short. So let's just be logical here, guys. We have had 6 times the same setup over and over again. And we had this time the setup not go to targets. I would say simply from a statistical perspective, chances are that the setup that we have right here is extremely valid simply because of the fractal nature of things. Like if we go down for the whole thing, you'll see that we literally have only one failure of the system, which is over here, and all other halfway back shorts have held perfectly. You can see hold of the 61.8 line, hold of the 61.8 line, hold of the 50% line. So what we are seeing is actually, because here we have a dip in the here we have a dip in the 61.8 line. Here we are, what you're seeing is that the short side is gaining momentum. The setups are becoming more aggressive, and thus, can the setups become more aggressive? It's only normal that the upside is, the upside corrections are going to get more aggressive and, in a sense, less technical from the perspective that there's going to be more emotion in this market. So that is particularly why I like this setup, why I'm short. There is also, again, the reason that this is, if you draw this that wave channel, now we have this trend line resistance along with A equals C. This is a perfect area wave channel currently. What should be considered? Because, like the way we trade is we always look at both sides of the coin. Is that we are still holding this setup. We're still holding this long level. So we really need to break this long to validate a move towards the 1.292s, where of course we are going to be buying, and I'm going to cover this in a bit. So we have a battle over the trend in a sense here. What you should keep in mind is that we are also trading a halfway back short over here, front run by 4 pips. You can see that the front run is exactly 4 pips, maybe even a bit less actually. Let me check how much. I think this is exactly front run 4 pips. Now, when you see front runs that are like this, perfectly technical front runs, I always consider it to be a, how can I say, in a sense, a statement on the validity of the setup. Because when you see that the setup is getting front run, that means it is most probably being correct, simply because of this respect from the opposing note. You can see that we actually dipped in the 50. So while we do have a battle over the trend, while there are chances that I'm going to get stopped on my short, and certainly those chances are, I wouldn't call them slim. They are there and they are possible. So the chances are there. However, I think that this is speaking in a sense to the validity of the short setup. Now, what actually, and that is pretty much the only thing that worries me in this whole situation over here, there is only one thing that worries me on my short setup, is this. Okay, this is the only thing that really worries me when it comes to my short setup, nothing else. This came on the 1st of March, so you guys should probably know. If you don't, I'm going to tell you now. Lows and highs tend to be placed on the first trading day of the month. That was the case in February. We placed the high in the euro dollar for the month on the 1st of February. So, in a sense, this is a strong statistical sentiment, a strong statistical reason to consider a possible bottom in the euro dollar. However, I personally feel like I need more information, and there is also another reason why I actually like shorts for now, and I'm going to cover this reason now. Now, what I'm considering over here, now let me just go over the setup. What Alexander thinks that we could potentially be trading is this. This is the next in the series, because we traded this ones. We traded this anchor to target, just slight above targets, and then from the next setup, we have the next in the series over here. So I certainly cannot say that this is incorrect. However, what I can say is that we have extremely good similarity between the candlestick formations over here and over here. I hope everybody can see what I'm going with. If I had to say, what this candle looks like, this is the candle that we posted on last Friday. This candle posted on last Friday, to me, looks either as the candle that was placed on the 11th, 7th month, 2012, or like the candle placed on, sorry, is this, oh, so this is, wait, was this in September? Okay, so not September, this is in November, okay. So then, like the candle placed on the 9th, 11th month. So, 2012. So what I'm thinking is, if we assume that these are pretty much the same setups, I think that we are probably, this candle over here corresponds to this candle over here, right? So I'm looking for today's candle to close actually bearish, and then I'm looking tomorrow for a fast spike towards the 1.92 levels, 5 fast spike towards the 9.2 levels. Now you're going to ask me, how did I come up with this number? There are several ways. First, if you do this, you'll see that this is 40 pips below this prior wall. Now, if we go from this wall, 40 pips under, 40 pips a bit higher, the 1.292, exactly where it has to be. So, pretty much, if we assume that this is a fractal repetition of what we had in November, we should see the 1.292 trade. Now, there is also the reason that I expect them to trade is this one. Regardless of how you draw these inverted head and shoulders, I mean, really, regardless of how you draw it, if you take the wicks, if you don't take the wicks, whatever, we have not touched the neckline perfectly just yet. The perfect touch of this neckline, on this daily inverted head and shoulders is going to come at the 1.292s. So I assume that this is very fractally similar to this setup over here. So I am anticipating run to the 1.92s. Now what could happen, unfortunately, and this is something that should be mentioned, and you guys can see that the euro is getting some sort of a bit over here. What could actually happen, and that shouldn't be forgotten, is that we could have two highs, then drag it, take us lower, because we have important event risk. Now, given the fact that if we assume the low on the first was not the proper low, the next true statistically significant low that could occur is going to be on a Friday. Now, okay, I know this is starting to get really complicated, guys, so I hope you're following. Now, if this is the case, now notice, if this is the candle we are in, and this is over here, we should be placing the low tomorrow, pretty much. We should be placing the low on the euro dollar tomorrow. But tomorrow is not ECB. The ECB press conference is on the 7th. So this could get tricky. That's the only thing I can say. This could get tricky. Now, what worries me, if I'm right on this fractal similarity, is that I can actually identify something that looks exactly the same, in my opinion, in 2010. Now, I have discussed many times, and subscribers should be familiar by now, that we are doing an exact repetition of 2010. So everything so far has been pretty much the same as it was in 2010. So if we are over here, this candlestick formation over here, and how can I say that we are probably over here? Is simply, we had this huge thrust, we had this downside over here, we had almost the same candlestick formation, and then we have a 3 days straight down. What is the problem with this setup? And the problem with this setup is that it would require today's daily formation to finish below the 1.297s, and then into ECB to have 2 more down days, pretty much. That's about it. Regardless, all of the fractal similarities, all of the fractal setups that I can see and I can consider show further downside in the euro dollar. What wonks have going for them is pretty much the low placed on the 1st of February and an awkward pull. As you guys can see, this awkward pull is getting quite a bit of participation. However, I really have trouble, considering this valid at this point. I don't know. It might just be me, but I just have a trouble with considering this valid just yet. Of course, if it is valid, we will know, so don't worry about that. It's just that for now, I find that staying on the short side from the appropriate levels carries less risk than trying to buy. And why am I saying this? Okay, this also, in my opinion, a sentiment of why the long side potentially is not very viable. This wonk over here. Yesterday we had a series of halfway back longs take us higher. This is a series, guys, not extremely clear, I apologize. So I said earlier in the subscriber chats, we broke the most aggressive series and we should be going halfway back long. So we are now halfway back long, but we have to keep in mind that today we retraced all of the gains that we made on the better than expected news. We traced gains on better than expected news as well, the retail sales. Oh, okay. Sorry, Dr. Zatia, I moved the mic a bit by mistake. And what has happened, is that we broke pretty much both the European and the Asian session laws, which is pretty important. So far, we are holding the halfway back short front run by 4 pips from the 1.3075 to most recent lows. So what we would want to see now is a sharp move to the downside. I don't know if we are going to get it. Certainly finding some resilience over here. Sorry. Certainly finding some resilience over here in the setup. However, I mean, I'm thinking about everything from a statistical perspective, and I think Alexander potentially appreciates this as well. Let me just do this. Sorry, guys. Uh, I'm sorry for the messy charts. I'm thinking from the statistical perspective. So I am going with the assumption that what we broke over here was actually just a false break of not a full halfway back short trade, but a false break of the next in the series shorts. Alexander, do you agree with this actually? Alex is back, so I'm just going to ask him. Do you consider this to just have been a false break? I think this was a false break, bro. Uh, Annoying, sorry guys. FX energy. Uh, Sorry guys. Okay. Давай исключим. Uh, Sorry guys. Uh, well, at least everybody's awake now. So okay, so what I consider was this to be a fall break, and to go further into this, let's count the number of setups that we had in this series of shorts. Honestly, guys, I feel a bit retarded for not taking every single one of these setups, because honestly, if we just think from a statistical perspective, like this was, excluding the one break, 1, 2, 3, 4, 5, 6 times this has traded. So, I mean, what are the chances that just because we didn't trade two targets over here, this halfway back short is not valid? I think the chances are actually pretty slim. Because I know the technical reasons, and I know that Alexander is correct when he says that we have the potential to retest the original short. Yes, that is true, but I'm thinking from the statistical perspective. It is very rarely, that we're going to see 6 or 7 similar setups go after each other. So what I'm thinking is that statistics here are in favor of us holding this setup. That is pretty much my reasoning, despite everything else. Of course, we will see this. We'll see how this goes. We have to keep in mind that we could potentially be doing some form of an awkward wedge like we did last week into ECB. Perhaps no longs are viable at all. That is also something that we have to consider. Maybe we're just gonna punch to infinity. That is always a possibility. However, I remain generally bullish on the euro dollar on the larger time frame because of this. This chart hasn't been changed since pretty much the 1st of February. So this chart has remained the same since 1st of February. Okay, we're getting some bit in the euro dollar, I think. Yeah. Okay, let's see. They're talking something about Spain and stuff like that. Let me just check the news. Well, everything that they have been talking about might just turn out to be bullshit, which would be very annoying. But again, we are riskless from, in my opinion, a viable short entry, and that is pretty much what matters. I booked 30 pips, one half of the position, and have trailed my stops to plus 10 pips. So Worst case scenario, I'm just going to be reshorting it higher. I am a stubborn guy, and I tend to follow my bias for like pretty large amount of time. Anyways, on the euro dollar, hopefully we're going to see some sort of a sharp punch. Of course, on the daily chart we have a three drive pattern. The reason why I think that we should trade the neckline over here is pretty much the three drive pattern we had in 2010 to the upside, perfectly traded the halfway back long. So I have way too many evidence, in my opinion, to tell me that we are going to trade a 1.292 at least. However, that doesn't mean that it's going to happen now, and we have to remember this. There is really no validation to tell us, okay, this is going to happen now. So of course we have to keep this in mind. Now, any questions on what I've said on the euro dollar? I know I've covered both sides of the market because right now we have a battle over the trend. And this is always the trickiest spot in the market because we have a battle over the trend. However, I personally believe that we have a lot of evidence to point to us that we will be making one more low. Any questions about what I said on the euro dollar? Okay, that seems to be a no. Just realized there is potentially a Kim short over here that is trading. That is good news for us, if that is the case. Right, Alexander? Alexander always a skeptic when it comes to trend lines. he just said, okay, whatever, pretty much, So that's about it. On the euro dollar, since there are no questions, I'm just going to move to the pound dollar because it is my baby. Yesterday I said, if you value your accounts, I even believe the wording was that if you value your accounts, you're not going to participate in this insanity. We held our short bias for quite a while, made some good pips. Unfortunately, last week I couldn't hold off my shorts. Potentially a mistake on my part. Well, not potentially, obviously a mistake on my part since we didn't book 150 pips in the end of the day. But the short targets had been hit, so I'm going to just go into the website now. I'm just going to go into the website. I'm just going to go into the website now and to just show what I posted yesterday in the evening briefing on the Aussie dollar and on the pound dollar. And I think you guys are going to appreciate my wording. So going to report section, going to the evening briefing. So guys, this is the evening briefing that I wrote yesterday. First thing that I have said I just realized that there was no short on the euro. That my chart on the euro dollar didn't get posted. Quite annoying. Okay, anyways, on the Aussie dollar, as you guys can see, I have said we are in a no trade zone. We have major event risk ahead of us, and any swing longs or short should be considered unrealized gains. Everything I'm posted here can change in a matter of seconds. So pretty much what I said over here was that, like we had a pretty good rejection from the bottom of the range. So chances were this is gonna get annoying. And the shorts that you see, I think I even posted the most immediate short setup. Yeah. Well, it's over here. Okay, it's probably not going to be valid. And I said all the shorts have hit targets. So now we need to validate resistance. And they really, I think people who didn't trade Aussie dollar, because I think most people would have been short to their mistake, should be pretty happy because we identify this as very risky. Going on the pound, I said similar situation on the pound dollar. We have reached all targets on shorts. However, difference is we have clear shorts. Now I won't short the euro pound just yet as a limit order. I want to see a bit more price action, as a few chances of getting whipsawed in a violent collection higher are not slim. And I think that is what happened. Now, when I posted this, the pound was at 1.51. it pretty much is at 1.52 now. Well, it is retracing slightly. So let us go back to the pound. Now, this is actually where you could make a case for, like actually initiating a new position. So we had this short, go to targets. After going to targets, we potentially are now in this short setup. Either that, or this halfway back short that also went to targets last week over here. So you have potentially two valid setups over here. One slightly goes deep into the 61.8 line. The other it has not traded perfectly, traded the front run. However, I would remain cautious on taking shorts on the pound. I know this is a valid short. It is a valid short, guys. It is as valid as shorts get. However, we have to keep in mind that the pound really has not seen any proper correction for ages. Last week's launch was pretty much, in my opinion, exhaustion, and we have broken a trend line that has served as resistance for a very long time. And in my opinion, that is not a small, not a small deal. I think this is enough of a reason to actually make you go, maybe, it is time for a more violent correction. So if that is the case, I would expect all the way halfway back short trade. So I would expect a recovery into the 1.41s. Of course, that remains to be seen. I certainly would say that this is a no trade zone currently, in my opinion, on the pound, and we need more information to validate bias. So that is on the pound dollar, and I'm going to check the Aussie dollar and probably give you Alexander. Unfortunately, guys, there's nothing in terms of Gartleys that I particularly like at this point, so please excuse the lack of any. Post it on the site. When I find something that I actually like, I'm going to let you guys know. So the pound, so the Aussie dollar is now okay. We have this halfway back short to target once, as you guys can see. This halfway back short to target twice, and now we are retrading this halfway back short. So what we can say on the Aussie dollar is that we are now within a valid series of shorts against the 10276. However, the reason why I would be extremely cautious with taking that short over here is that we are rejecting from pretty much 7-month range, and that is pretty significant. What I would like to see is some sort of a confirmation from the Aussie that we are either go to the downside or we are going to see further strength. I don't mind missing the, I don't like top picking. I don't like bottom picking. I like valid setups. And when it comes to the Aussie dollar, when you just, like look at the daily chart, like this range is so. By the way, this chart is also like a couple of months old. I haven't actually updated this chart for a while. By the way, annoying break over here, but still it is the way it is. So we have this range, we have this triangle. I mean, triangles generally are the most annoying thing in the world, and regardless of how I look at it, I just am afraid that anything could happen here. I mean, I really cannot find much of a technical validation to either side from the current levels. I can make a technical validation of playing shorts from over here. I can make a technical validation of playing longs from the bottom of the range. But I really cannot make a technical validation of anything from the current levels. What we have to keep in mind, of course, in the meanwhile, is that we are in an extremely large halfway back long with extremely large price targets above us. So chances are, once we can finish this range, which we could have done, by the way, this could have been wavy of this triangle. But even if that has been the case, that doesn't mean that we want to participate right now. So, in my opinion, the best thing you can do on the Aussie dollar is to remain on the sidelines. That is literally what I think. Now I'm going to move to the Euro Aussie just because I've been looking at this for ages, and we booked some good profits last week. Could have been better, of course. So this is Euro Aussie on a daily chart. We have a next in the series, long. that traded made wonks free and is now plunging. What I'm thinking is that our next wonk setup is going to come from this bullish bat that I've outlined. I hope everybody can see it. So let me remove some of the fips just for clarity purposes. Okay, you can see that the 50% long is pretty much over here where the Euro Aussie did the 180 pip rally from. However, it is failing to actually get a momentum, which makes me think, and of course that also has to do with my bias on the euro dollar, that I think we should say some more downside. I think that we should be testing the 1.263s. Of course, there is nothing set in stone, but that is how I feel. Also, when you go on the 50-minute chart, the 50-minute chart, or even the hourly chart or whatever, okay, the euro dollar is getting some participation to the upside. On the 50-minute chart, we are in some sort of a triangle, I would say, which actually looks bearish. And that further is a testimony that we could potentially see some further weakness. We also have a clear series of shorts above us. So we had this halfway back short trade once to target, as you guys can see, and this halfway back short is trading now again from over here. So in my opinion, chances are, you can see by the way that pretty much the targets of this halfway back short align with my buy level. So I think chances are good that we are going to see some further weakness in the Euro Aussie, and I'm waiting patiently. This is I'm waiting patiently. This is really a daily setup with 1,500 pips targets. There is no point of rushing. No point of rushing. It is going to come to us. I've been waiting patiently for ages. I can continue waiting for a while. Plus, I already made 180 pips or something like that. So, it's a good thing. So that's on the Euro Aussie. Do you guys have any questions for me? And as I'm speaking, I see the Euro Aussie is grinding lower. Any questions, guys? Okay, since there are no questions, um, oh, actually, Ali is typing a question, I believe. Well, no, he didn't. So, can I say on the S&P, I told you so? I really remain extremely amused when people go to me without any clear technical validation and tell me, bro, you're a moron. We have topped. By the way, this chart is probably 4 months old, and as you see, pretty much, got the correction and, the move higher. Anyways, what I want to point out on the S&P is very simple, that we are in a very clear series of longs. So we are going to need some extreme catalyst to take us higher. This is the fiscal cliff long that we held, and we are now holding extension longs with the 1,552 targets. And what I've kept saying on Twitter over and 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 over 1.92, 1.94, 1.94 is that the S&P needs to break its most aggressive long setup in order to even remotely consider the possibility of topping. That thing just has not topped. We have been unable over and over and over and over and over again to break the most aggressive long levels, and that is very important. There is no point in top picking. There is no point in gold, in my opinion, has targets of 1,000. You know, I'm extremely bearish in gold. I think it is a bubble, and I don't participate in gold. That is my fundamental view, and because this is a fundamental view, I just don't take positions in gold. Technically speaking, we have supported the 1,520s on gold. That is valid support, 1,520. Other than that, we are in clear shorts in larger daily longs on gold. I'm not even going to open the chart. I'm going to leave Alexander to cover the gold. She's a fan of gold. Now, what I want to point out on the S&P is pretty much that, guys, we cannot consider topping until we break this. Now, for those of you that have been following us and that have some idea about the strategy node, this is about, we have halfway back long, both true targets, and then we have the next daily setup, which is this extension one from the 1,449. So we held this perfectly, and we now have targets at the 1,552s. Alexander is threatening me with a knife if I say one more time. What was it? Over and over. So if I die, you know, make sure to prosecute him. Anyways, that's about it on S&P. Targets at the 1,552s. Immediate targets at 1,000. Let's see. Immediate targets at 1,535. 1535 are the immediate targets. The more aggressive targets are at 1552. Also, one more thing that subscribers have been well aware of. A couple of weeks back, I said, don't look at correlations. Don't figure out what the Aussie, what the New Zealand dollar, or the Euro dollar is going to do based on what indices do. This is a year of no correlation, and this is going to remain, in my opinion, for quite a while. On the New Zealand dollar, all I'm saying is that we are retesting past support, I believe. Okay, so we have this long to target. Yeah, we are retesting past support, so nothing to do over here. We have broken this thing. The bias remains, in my opinion, to the short side for at least another 150 pips. We also have broken a pretty huge range, I think. A pretty huge range. We have also broken a pretty huge range. So I think that there will be no support over here until the 0815s, pretty much. 0815s. Let me just check. This is the 4-hour chart. Yeah, and on the 4-hour chart, I have to say, looks like a decent test for broken trend line. I wouldn't actually trade it over here, but let's just follow the shorts that we held. Halfway back short that slightly got broken. You know, I don't consider this a break. This is the way I trade. So another halfway back short. This one not broken to target. Another halfway back short. So same situation as the euro. We are within the next short with targets at 0818. So bias has to remain to the downside on the NZD USD, while it remains under 0835. Actually, I'm going to give you Alexander so he can cover some of that stuff as well, because the guy is, you know, explains stuff very well. So that's about it, guys. That's about it for me. I'm just gonna do a Twitter comment on the indices, and I'm giving you Alexander. Thank you very much. If there are any questions for me, I'm going to, you know, just ask them, and I'm going to cover them when Alexander finishes. There you go.
Okay, guys, welcome. Glad to see some new faces in the room. And also, I'm so happy that George stopped saying over and over. It's getting on my nerves. Thank God that's over, huh? Okay, just before I started talking about other things and maybe things that you guys are interested in, I just wanna draw your attention to the daily chart of the Aussie dollar. Our subscribers pretty much know this pool with the FIB. So I just wanted to draw your attention that the moment we had the dip below this 50%, see what happens. Directly, this thing pulls to the upside and opens the new candle just above the 50%. Retests the small 50, like the large 50%, goes to the upside. Of course, if we go to a smaller time frame over here, we are sorry, in a series of shorts. We're gonna actually, George, you had a look at Aussie dollar on a small time frame. Okay, we're gonna have a look at it maybe later. I just wanted to put it out there because I've been looking for larger time frames. Okay. Maybe just before we get away from the larger time frames, let's have a look at the euro dollar on the larger time frame. Pretty much, not a large change since yesterday, but still, we are still expecting to get, the level trading over here at the 1.2922. Still within this larger short drawn from a 133.178 to lows, with a sort of a big front run. Well, I just want to, I know George covered this, but I want to go to the micro time frame, the 15-minute chart. The fact that there is some validity to the short which George participated on this morning, which is this one over here. Let me just get rid of the long so you don't get confused. It's this one. Besides the trend line here, which is an obvious fact. Speaking, properly in halfway back system, the fact that we have not reached, the target of the larger short, which is at a. Sorry, guys. There's something. Yeah, that's the problem. The fact that we have not reached the targets down at the 1.295, basically, this halfway back short is not the next in the series. Technically, it's just all the way halfway back of the series over here. It's not the larger series that we're talking about. It's not the next in the series because from top we have this thing. So it's once with a very big front run, twice. Let me just put it properly. Then again over here, and then we have the next one in the series. So it's not this short over here, which we're talking most current. It's not the next in the series of the larger. Rather, it's the all the way halfway back of this series over here, which we have. Let me just. So this is why probably we're seeing some resistance. We have some validity over here to the short. So it's this one, which perfectly held to the pip. Then we had the next one, I believe, was this. Yep. So our most recent one, which came into play on Friday, failed us this week. So at this point, the series is broken, and what you have in your hands is only all the way halfway back of this move. It's not the next in the series, the larger short, but still valid. We're still not gonna. I'm not gonna talk about this level, which is over here, the 129.8 level. This is also a larger support level, but still not valid. I will start considering it the moment and if we break out of the 132.37. At this point, it's just no option for us to consider it. Just very quickly going back to the larger time frame, what I want to show you guys is even if we break out of this without trading 1.292 level all the way halfway back short, which we have from the top, does not break our larger support level. It just means that we could drag ourselves to the short at the 133.635 for the whole of March, and we hope that's not the case, but still, for the first, at least 2 to 3 trading weeks, and beginning of April, late March, test the proper whole halfway back, or the level which we're observing, the 129.2s. This is also a possibility. At this point, it's just where market is not moving too much, so we have plenty of time and room to make theories. It's just you have to stick to the facts when you're talking about theories. So okay, enough with the euro dollar. Probably you guys gonna get bored from that. Okay, let's go and have a look at another favorite of ours, which is the euro JPY. Okay, pretty much no major change since the morning briefing, so this could be boring for our subscribers, but still. 2 consecutive halfway backs. First one that held 3 times, and we're drawing the next in the series, traditional, which is still holding. At this point, it's just not doing much. It's just sitting over here, ranging, breaks to the upside, range, breaks to the upside, but we'll see. It's going to be interesting. Problem over here is that we really need to shoot up in extensions in order to be able to break away from the short, because both the targets of the smaller long, which we have from the larger long, this 19,605 level, which we've pinpointed, and as you can see, it's provided very good support. Don't break our larger short. Targets of the larger longs are just the 61.8% line of this larger short setup, drawn from 125 to 1 to lows. So it's going to be interesting. I advise you not to trade within the range over here. Just trade from the bottom. Whatever your bias is, just trade it from the bottom, or off the top. So if you play the even, first, second, we can consider this also a touch. First, second, third touch. You could be, not all the way riskless, but you could be partially riskless. You could play with a smaller stop or something. There's plenty of room to experiment with. It's a favorable play, so have it in mind. Okay, euro. Well, for me, to be honest, guys, the euro. I respect what George, has to say. He puts in a lot of profitable trades. Just technically speaking, for me, the euro has to retest the 1.317. It's just a must right now for it to do so. Okay, going to something very interesting, which has been the leader of our rally here. I think so. At least for the JPYs. It's USD-JPY. So USD-JPY has broken away from all its shorts right now at this point, and is sitting on the bullish side. Problem over here is that we're still in this massive range. So entries over here are pretty difficult to. Don't take too much risk. Just play the micros and don't be too greedy. What we didn't play into is all the way halfway back off the top, and we've identified that we've received participation from this thing. I had a drawn basically this series had a proper micro series going down here, so it's only normal for this thing to get some respect of the halfway back short. Of course, this thing is, if we get rid of it, we're trading from larger long setup, which is our 91.161. As you can see, very good. We haven't even been able to, let alone close a candle below it, but even have the body of a candle below this. So in our business, this is pretty bullish. Of course, this can very easily change if there is some speculation from the BOJ side that they're not going to do additional easing, or they're going to turn to more to buy up more samurais instead of foreign bonds. So just keep it in mind. Okay, and what we're sitting on top right now is, and I'm considering this because it has not broken the 65% line over here. If I put it, and we have adopted this method thanks to one of our subscribers who's a very good trader and has brought this to our attention. We have not broken, excuse me, let me just, we have not broken the 65% line over here. Okay. And technically this setup is still valid. Of course, we have a valid chart off the top. Best play over here probably was to pick it up on the 61.8% line with a very small stop loss, something in the sort of 10 pips. For those of you that were not so foreseeing, we're just gonna have to wait at this point. We're just gonna have to wait. Micros were picking up early morning over here. It was there was some valid entries over here on the micro trend, but for now it's nothing. Hopefully the ISM manufacturing at 5 Bulgarian time, which is 3 GMT, is going to give us some sort of an idea. Maybe get this market moving somewhere. I really hope it's not the same as last week. Where at least we had some movement on Monday to this week. Starts off slow Monday, slow Tuesday, maybe Thursday is going to be a rocker, but we'll see. Okay, any questions, by the way, guys? I've been talking a lot, but do you have any questions? Why is George so stubborn on the fact that we're gonna make one more move? Okay, Melinda, we talked about this I believe last week. George thinks George is just a very strong proponent of the theory that we make lows and highs around the first of the week, like the first is the date of the month, excuse me, or the first trading Monday, or as I can recall, also Friday as a possibility for a major low. Yeah, it's all has to do with the it's just a practice that some of the traders adopt. I also like that. Whenever George puts a lot of validity into it, I include it in my analysis. I never disregard it. And having in mind that this market has done this since the beginning of the year, so we have 2 consecutive months of such price action. Let me just go to the euro dollar. Basically the low that we had in January was made on the first trading week on a Friday. The high that we had in February was made on a Monday on the first trading week. It actually was made on a Friday. It was the first, but we just made a marginal low on Monday and basically solidified. We're just saying. Why is that not enough? Because it has not filled our long targets. Technically, okay, let's dwell into this. It's something that I see you guys find interesting. Okay, if we get rid of all the biased setups that we have, just let's start off from. Let's just let me see if. Okay. Okay, so starting from scratch, we know for a fact that this 50% level is a multi-year support within the euro dollar. We have bounced off it. However, first time we traded over here, we dipped. And second time we traded, algos basically attached themselves and said, okay, 50% is valid. We're taking this. So they participated off here. You see how it traded? Perfect touch. And then we rallied. There was also a failed halfway back over here. It's just that it didn't respect the smaller setup. It respected the larger setup. It respected this thing. So making an analogy back to 2010, we think that this anchor is going to dictate pretty much everything for us. And the fact that it's not enough for George, okay, drawing this thing, there are two possibilities over here. Either algos are considering all the way halfway back, or they're considering the first halfway back traded on the micro series, which is this. So for George, he wants to be, because he likes the 129 level, because it's, I don't know, it's closer to the neckline, first of all, closer to the halfway back. In general, it's the level which we talked about that has been dictating all of the price action, because that we had. Okay, let me just. We had this thing trading perfectly over here. So for us was only. Sorry guys. It's TOS a bit of a monkey with a razor blade. So when we didn't break out of this thing, actually we didn't hold this thing, our extension, the valid one. The only thing for us left is the full halfway back. The problem here is, and I've discussed this with George, we could have actually our long setup filled. It's just that this thing also could have been, could have traded over here. It's just that it's not a perfect touch. And George is sort of perfectionist guy, and he likes to see perfect touch. So going back to your question, Melinda, George just wants to see a low held on a first Monday. First is a number which was on the Friday, Monday, or Friday, this Friday, come into 129.22, or they have the full halfway back, and see us rip from there, and that's going to be his clue for for a high. And yeah, he has a point over here. If we had touched a level which algos decided that this thing is valid and we're going up from here, we would have seen already a break. Last week was just terrible. It was awful price action. There is also the case that maybe they're put on hold, because that's also a possibility, and everybody's just waiting to see what Draghi says, because they're speculating, which I don't think is going to happen. Still, they're speculating that there's going to be a rate cut, but I don't think there's any reason for that, because if you think of it, if they do a rate cut, the ulterior repayment is going to be a fail, because they're going to get less money into it's going to basically, a rate cut by ECB is going to expand their balance sheet. It's not going to shrink it. So there's actually no, I don't know why they would put it out there. It's just market talk of people who want the euro to plunge, or I don't know what they. I don't know. It's just from the beginning of the week, what I've read around the sites. Everybody says that we're gonna. It's bullish, bro, but it's not gonna do any good to ECB. It's enlargement of their balance sheet, and that's the least, for me, that's the last thing they want to do. But okay, so what George wants to see, and what I'd like to see also, is us hit at least the 129.2. It's just a level which I think is better for us instead of this that we have right now. That's my only problem with this level. That it's sort of valid. We could say that it traded one more time, but it's just not the level you would look for. It looks good, to be honest. Break of shorts. Give me a break of shorts, I'll play the long side. But until then, my hands are tied to the downside. Trend is short until it's not, for now. Why are we sure which one, the 129.2 or the full halfway back? Why are we so sure that it's coming? Is that what you're asking? because we've talked about this. That it's very similar to the 2010 trading. Um, it's to be honest, it's almost the same. The only difference between 2010 and this year is we have a series of traditional shorts going down here, which is good to be honest for us. But in 2010 we just have one extension, which is sort of imagine this thing over here like this, and takes us down to the full halfway back. Let me pull the trigger, Steven. But this is 2013, which looks a lot like 2010. It's just, Melinda, it's just the way we trade. It's just the fact that okay. And we want to see a major low. That's the typical trading mindset you should have. You want to as much things as you can to be going for you, because it's clues that make you money. It's not the way what you think. I don't know. We'll see. For now, we don't have a low into a major long. According to the system, we should according to the system, to be honest, we have to trade the 128.7. And if we trade it on Friday, I'll be in there. Do we always get what we want? We normally get what we want. The fact is, if we're going to execute it, because this is a huge level. Like if we have to play this thing the way we play it, like we play the other retracements, what is it? It's a 200 pip stop loss. That's not serious. I gotta play it with half of a mini lot in order to be able to sustain the leverage or something of the sort. Okay, we're just saying we have practice with the system. We normally know what's gonna happen. So, we just don't know when it's gonna happen. We're making predictions. We know that this thing should happen. We're just making predictions on when it might happen. It has to be on a Friday in the beginning of the month, or a Monday, or the first of the month. Okay. I hope this was helpful with what I've just explained. Okay, going back to 2010, just have a look at it. Same thing. We hold one halfway back, then we hold the full halfway back, and then again we hold the full halfway back, which brings us to the top of our range. And over here, if I'm not mistaken, problem over here is we break the so-called short out the top before we go for a full halfway back. That's been one of my concerns. I haven't been sharing it around because it's just my observation. In 2010, we have broken this thing, like this halfway back short, before going down. And this year we haven't. That's the problem. We're still in this thing. But of course this is a range, so we're not considering it. Okay. You see, it's pretty much the same. Except we have one low over here. One more low. We have 1, 2, 3 lows over here. What we heard, we have only 2. And the fact over here is we're not trading in traditionals. We're trading an extension off the top, which takes us down to our larger long level. And I personally would like to see us going, to the full halfway back, the 128.7, because at that point, all our nice fundamentalists, like the nice people with the fundamental views, are going to say, okay, we have breached the 130 level. Italy has problems. Cyprus is also in the can. They're going to think of 100 other reasons to start shorting the euro. You can see it, the major banks have started switching bias. Most of them are short. And the moment we get down to the 128.7 level, it's going to be so much shorts. There's not going to be anybody on the long side. We're just going to start ripping to the upside. We just need one pop from a good economic news. We're going to collect some stop losses, and from there it's going to be just a nice run to our, hopefully what is the 141, 142 level. Yeah. So we can have a nice summer, huh? Okay. Enough with the daydreaming. Okay, George covered Euro Aussie. We covered Euro JPY and used JPY. Do you guys have any other particular instruments which you'd like me to have a look at? Okay, we haven't looked at gold, which is a bit of annoying right now, but still. Okay, so gold. We talked about the origination of this anchor and why we're not, using the stop. It's just that algos have attached over here. Whole series to the downside started from the 1684.74. It's the first half of that. So as you can see, the moment we broke out of our extension short, which had little participation. Let me get rid of this. We traded the 1690 to the pip. And from the 1690, the series was not, the best of what we would like to have a look at. It's, I think it was from here. We held the first halfway back. From there, we had one more Gong's target. Then we had next in the series again, holds to the pip. And then now we have in our hands a same anchor new low, which has not traded before, but we're seeing resistance over here. I will, no problem. We're looking to the downside in gold. Have in mind we have the 1523 targets, which are prior lows. If bulls have anything to show us in gold, it's going to be around the 1520 level. 1539, if I have to be really correct, I like the 1539 low, but still 1524 is the target. And if bulls have anything on this market in gold, they're gonna show it on they're gonna show around the 1520. Let me just quickly tell you, and you see what I mean. Okay, so what we have had as previous support for us and gold is, the long trend, the major long trend in gold originated from, this is the first place where we held the 50%. It's the 1155 to highs. It has provided support over the years for us. 2009, 2010, etc. 2010, excuse me, to 2013. So either we hold here. This gold is in a larger long move with a target at the 2105, or we go to the downside. And the downside, if we break the 61.8% line here, it's gonna be violent. It's the least we can say. Some guys are gonna get wiped off, but that's speculation at this point. We have a major support level trading in the 1539.7. Look for it. Don't disregard it. It's been there. It still is there. But maybe with Sarah's gone from the gold market, you never know. Okay. Enough. Okay, so long-term support, 1539. Short-term resistance, 1583.79, target to 1555, 57, if we have to be exact about the cents. Okay, Euro Aussie is what you wanted to have a look at. Okay, Euro Aussie is trading the larger long bone, and we have discussed this. I don't want to go to larger time frame charts, but it's here. Is the next in the series traditional long? Okay, let's zoom out. So anchor, your anchor is a 1.21589 approximately to highs. It's the next in the series traditional long within the Euro Aussie. Traded perfectly first touch. What we identified as a series of shorts off the top, we thought it was broken. Unfortunately, maybe it has not, because we have seen resistance over here at the 61.8% line. There are no coincidences in this market. Also we have seen selling at the 1.28482, which is the 50% line over here. There is support for us, 126.758, which is the most obvious one, of course. And something, I don't know what it is. What is it? Maybe other systems or other people like this level. We have had some support here. We rejected off this thing today again, but not as properly as last time. Ideally, we're going to trade back to 50% over here, or even if we fulfill this short, I would have no problems buying the Euro Aussie at 1.256. No problem at all. 61.8% line, especially with something that has to do with the Aussie dollar, is definitely a buy. Okay. Questions? No one? Anything? This is sufficient. On the smaller time frame, if we have to be 100% correct, we have one halfway back, two halfway backs, three halfway backs, four. We're talking about the short. Ghost target at this point is trading a same anchor new high, held the 61 point, same anchor new low. Excuse me. Held the 61.8% line perfectly. Target is the 126.99. And as you can see, holds 61.8% line perfectly, holds 50 perfectly after that. Okay, getting rid of this chart. Okay, guys, anything else you're interested in? Maybe you have new people in the room still. Hopefully, they have not been discouraged with what we've shown. Guys, I'm open to questions. If you have any questions regarding the strategy, if you haven't seen this before, if you're wondering what we do here, also how we make money, how we execute trades, besides the analysis, because analysis is very good, but if you don't have the execution behind it, it's just a bunch of drawings on the chart that you can go around the pub and scare people with and be like, the euro dollar is going to reach 1.42 this year. And 6 months later, everybody's going to be like, oh my god, this guy's a financial guru. But you have not executed a trade in your life. Can you keep it quiet, guys, please? Okay. No questions? Nothing at all? Sure. Okay. What I should say, if you like what we do here, this is our site, Z&SGlobal.com. And if you would like to have a test account with us, like a trial account, I'm breaking up. That's not good. Okay. How is it now? Is it still breaking out? Okay. So apparently we're good for now. Z&SGlobal.com. That's us. Have a look at the site. There's some free content. Also, if you would like to have a trial account, you could give us heads up at support at Z&SGlobal.com. Z&SGlobal.com. Yep, this is it. Our very friendly support guy for now, Simeon, is going to make the trial account for you. Okay. Okay, guys. To be honest, I don't I don't know what more to talk about. We have pretty much covered everything, and it's pretty much a dead zone. Also, it's not moving, which is extremely annoying. 2 consecutive weeks of this price action, and I'm really starting to get scared of this reaction, due to Italy, due to the elections in Italy, because just before our nice friends with the awesome pizza came around with their elections, everything was going good. Um, but yeah, they put too much tomato sauce on the pizza, and right now it's not looking good, huh? Okay, guys, anything in particular you want me to have a look at? Anything? No? Okay,